Hello, today I want to talk to you about an opportunity that you really should take advantage of. It will create a new revenue stream by solving the number one issue that clients nominate they need to fix: cash flow. In our soon to be released Accountants Research Report for 2017 and 18, the accountants that participated in that survey nominated as their number one focus for this year was to grow practice revenues by leveraging existing staff to introduce new services that are easy to implement. And this is what this video is all about. We aim to show you how you can take advantage of this opportunity by solving this issue and generating new practice revenues for you. So let's have a look at how we do that. We're going to feature the use of our business valuation tool and how you can use that to demonstrate the improvement in business value by improving a client's cash flow. As part of this is demonstrate the use of a third-party solution, which is part of our business partners programs called IODM. Now, for those familiar with Bstar's Viva process, I'm going to highlight for you the key elements of that process that allow us to demonstrate or quantify the value of improving a client's cash flow. So the starting point for that is the Viva process. So let's have a look at that. So the Viva process is a three-step process. However, today we're just going to focus on the discovery phase and the needs review, because in the needs review, what we often find in the top 2 or 3 issues of an SME business is cash flow. The valuation methodology that the business valuation tool applies is capitalisation of profit. And to do that, we need to work out 2 components. The first one is the sustainable earnings, and we use a weighted average notional EBIT to do that. And the second part is we need to work out a cap rate or a profit multiple. And I've just got up on screen here the first part of that equation, which is the financial information. And I just want to focus on the free cash flow factor here. And you can see that for this particular business, the free cash flow factor we've calculated is 1.24. And the system automatically tells you how that compares to other competitors in that industry. Its free cash flow factor is 1.24 as compared to the industry average of 1.27 and the benchmark for that industry of 1.13. Now we've established what the business's free cash flow factor is, let's work out what the ultimate cap rate or profit multiple is. And now you can see, just by running the one-page biz cap rate statement, that the business is calculated as having a business capitalisation rate of 3.07. I now want to introduce you to one of our business partners, which is IODM, which has an online debtor management system that will enable you to have some pretty dramatic improvements in terms of collecting outstanding debtors for your clients. But before we show you some of the tools, I just wanted to give you some of the background to this and why we believe it's an area that accountants should be considering as a value-add service for their SMEs. First is the cost of actually having debtors. We've got some statistics here that tell us that the cost of having debtors up to 30 days outstanding is just under 2%. At 60 days, it's a shade over 10%. At 90, it's close to 20%. And 120, it's close to 31. The cost of this is pretty significant. And that is that for every $1,000 that you have in each of those outstanding categories, you can see the numbers on the screen there. If we take, for example, at 90 days, if you've got $1,000 in that bracket, it's costing you effectively $200. Now, where do we get this data from? We got this from a recent Harvard Business Review. Now, let's have a look at the IODM system, and I've just got a little schema there which demonstrates the workflow. The IODM system can take data feeds from all your major accounting packages, so Xero, Smile, etc. What it allows you to do is effectively set up some business rules that take you from the first reminder letter right through to debt recovery. This is enabling not only to run your own debtors better, but also for your clients, that you're able to automate and run a batch process, if you like, on a regular basis to make sure that clients are being followed up in an orderly manner to reduce your days debtors outstanding. So what I'm going to do now is just give you a quick overview of how the actual system works. So the first step is to import the outstanding invoices from whichever accounting package that you're using, whether it be Xero or Mile. The next step, once you've imported those outstanding invoices, is to determine what actions you're going to take. So you can see in the screen here, I've got 3 outstanding invoices, and now I have to determine what action I'm going to take and how I'm going to notify them. So you'll notice here that they can be notified by SMS, email, or letter. And I can also run it as an entire batch, or I can pull a particular one out for specific reasons. So once I've determined what actions I'm going to take, my final step is simply to notify the debtors, and all the business rules that I've put in place will now be applied and the communications will be forwarded to the clients. The system also has a faster payments and query account function, and I've got up on screen here just a sample email, and you can see there's 3 distinct options that the client's presented with. So the first one is that they could choose to pay that now, and they can do that via credit card through the IntegraPay system. The second one is that they may have some issue with the outstanding invoice, so they can lodge a dispute in a formal sense. And the third one is that they might have some cash flow issues themselves, so they can choose to debtor fund it through Smart Fee. One of the things we do know about this type of facility is that, based on psychometric testing, people are more inclined to take action if you make it easier for them so they can resolve the matter at hand straight away. So the final step is to demonstrate how we increase value. And so how we're going to do that is that we're going to show you the existing position that client was in terms of outstanding debtors and their free cash flow factor. And then we're going to implement IODM, and in, let's say, 6 months' time, we're going to rerun the numbers and we will find the client has been able to reduce the debtors, and we want to determine what the impact of that improved debtor management system has had on the free cash flow factor and therefore the cap rate and the ultimate business value. So let's have a look at that now. So if we go back to the original financials, you can see that the client had $205,000 in outstanding debtors, and they had a calculated free cash flow factor of 1.24. And when we ran the numbers, we were able to estimate the following value. So here's the original BizCap rate statement, and you can see that based on a profit of $549,500 and a cap rate of 3.07, the value of the business was about 1.7. So now what we're going to do, reduce the number of outstanding debtors as a result of implementing IODM, and we're going to see the impact that that has on the free cash flow factor and therefore the cap rate and the ultimate business cap value. So let's do that now. So we're now back in the financial information screen, and what I'm going to do is reduce the debtors down to $61,500. And this is as a result of being able to collect almost 70% of outstanding debtors over, say, a 6-month period. So I've done that now. I'm going to hit the calculate button, and you will see the free cash flow factor down the bottom here will change. Now that we have a new free cash flow factor, I can now rerun the report. Nothing else has changed, and it will now tell me what the new value of the business is. So here's our new BizCap rate statement. You can see there's been an improvement in both the cap rate and also the business cap valuation. So let's compare these two side by side now. So on screen now we've got the original statement that we ran, and you can see the values there. And then we've got the second one, which is the result of improving our debtor collection processes, bringing the best part of 70% of the outstanding $205,000, and you can see the impact on both the cap rate and also the ultimate value of the business. So in hard dollar terms, this is what we've been able to do. So I've just prepared a simple graph showing the beginning of the period when we were not using the debtor management system, and then I've also run the numbers 6 months later to see the difference. Now, whilst it's only an increase in $33,000 in value of the business in 6 months, that's still a good result. I think the other factors that need to be considered is also the business now, the best part of $140,000 extra in cash, And then you've got all sorts of benefits that can be derived from that by retiring debt or additional contributions to superannuation or capital injections. So to finish up, let's just run through a quick summary. The first thing that we need to do is, via the needs analysis, identify cash flow as being a key issue. The second thing is that we need to use the business valuation tool to calculate the initial free cash flow factor. Once we've done that, we can run a business cap rate statement, which will establish the current value. Next, we'll implement the IODM system, which gives us an automated debtor management system, which will help us improve the free cash flow by reining in outstanding debtors. And then after 6 months or another nominated period, we would revalue the business to determine its new value, which would have increased as a result of the improvement of the free cash flow factor and consequently the cap rate. So I'll wrap the session up there. Hopefully that's been of use to you, and I welcome future discussions with you all. Thank you and bye for now.